Thank you for joining us today. This is Wenjie from HSC Group, and we have Stefan, the CEO and portfolio manager of HSC Group and HSC China Fund. 2 weeks ago, we talked about the National Party Congress in China and our expectations. Post the meetings last week, we'd like to share an update from the meetings. Stefan, what do you think what is your overall impression from this year's meeting?
I think the meeting developed quite as we had expected. I think there were no major surprises from the meeting. It's a continuation. She is being the leader for another 5 years, and he has been able to put together his own team, meaning that the 6 people on the Politburo Standing Committee besides him are people that have been working with him successfully in the past. What was your take on the Congress, Reggie?
I think the expectation we had was pretty much being realized in the actual personnel changes. Again, I want to highlight this National Party Congress is more about the personal change. So the key persons that she has been chosen are the one more or less in line with market expectations. And he's also surrounded himself not by incapable people, and these people all have a very solid background. So overall, I think that to me there was a little surprise from the actual meetings. Again, at the same time, we did see the market has been volatile this week. Stefan, what is your take? What do you think is the reason behind investors' response? And what do you think is market is misunderstanding?
Yeah, it seems that especially international investors have reacted quite negatively to the outcome of the National Party Congress last weekend. You could almost say that some investors were throwing a tantrum. If you look at the Hong Kong stock market being down 6% on Monday, I think that some of the dissatisfaction, of international investors is due to the fact that there was no clear strategy in terms of how China will get out of its zero COVID strategy. I think there was a bit of a disappointment for international investors. Do you see any other reasons why international investors took that
Yes.
so positively?
I think from the Western media's reporting, you can clearly see that the key concern they have are the COVID policy, the ex-COVID policy. And on top of that is also the one-man risk in China, that she has consolidated too much power. But you probably didn't read this, but if you look at the details of the meeting's announcement, there are actually many areas that I think Western media are cherry-picking the negative side of it. For example, they talk about the consolidations of Xi's power, but they didn't tell you that Xi's thought is not included in the party's constitution, which previously was expected to be included. So I think there's still a very balanced situation even inside the Chinese Communist parties. And there's a lot of focus on securities, but at the same time, they also talk about the growth strategies in China. They were talking about not giving up military or military actions against Taiwan if they really pushed towards the edge. But at the same time, I think a peaceful integration of Taiwan is also parties or Xi's top priority. So I think there are areas that the Western media are cherry picking. It's not, in my view, unbiased view of what's happening in China. Stefan, what do you think are the things that have been misrepresented by the media or by the market?
Well, I think there's a lot of talk about she has consolidated power and has more power, but in fact it's if you look at the situation before and now, I mean already before the NPC, President Xi actually had a majority among the Politburo of 25 members. So I think this is the focus, in my view, of the Western media is on the wrong aspects.
And Stefan, what do you think is the investment implications from this year's meeting?
I think for us that's actually a very positive thing in terms of investment implications. There was a lot of talk about Security, there were 16 different aspects of security were discussed. That includes food security, food safety, and goes as far as technology, and of course in terms of China being less dependent on import of the top technology. So those areas create opportunities for us to invest. If China has to rebuild the semiconductor industry domestically, there will be many opportunities for us to invest. Moreover, there was a lot of talk about balanced growth, not growth at any price. So trying to avoid bubbles, but also sustainable growth, green growth, meaning growth and focusing on also on the renewable energies, and that's, as you probably know, that's a field we have been focusing quite a lot in the past in the HSZ China Fund in terms of our investments. Moreover, of course, as a result of this fire sale that we have seen as a result of the after the National Party Congress on Monday, I think the stocks are now really cheap, whether you look at Hong Kong or you look at the mainland shares. So there are lots of opportunities, and I believe it's an excellent time for investors either to increase their positions or add to existing positions or even build new positions in China at this point.
Yeah, I agree with you, and I think the other thing includes that China is probably the only market you can find in the world that has a really accommodative monetary policies. US and the rest of the world are raising interest rate. China is keeping flat at least. At the same time, China, last quarter's GDP growth was still 3 to 4%, which in a global comparison is still quite high. And given the low base we've seen this year, there's a potential for re-acceleration of GDP growth. So yeah, I agree with you. With that, we'll end our session here today. Thank you again for watching. Please let us know if you have any questions. HSC Group is based in Hong Kong, and we're here to help you to achieve your long-term investment goal. Thank you.
Thank you.